Birthday. I turned 30 years old today. And yeah, I guess 30 is a pretty big one. Shit, the 20s went by quick. Listen, wow, what can I say? I feel old, although I know I'm not. It's probably not a good thing. Probably need to figure that out. But thanks, appreciate it. And then, I'm pretty proud of myself in my 20s. Did a lot of things, succeeded a lot, failed a lot, which is what you want in your 20s. You want to get those failures so you can learn and you can grow. Hopefully in the 30s, you come into the 30s with some stride, which I feel like I am, although we went through a little bit of a rough patch here in the trading side of things. That's okay, it happens. But every time that happens, we come out, we get better. Right now, we're tightening things up. I'm tightening things real tight. Okay. And we're going to be using a strategy called Strategy 2 a lot more than we were before. And this isn't necessarily a strategy I've been using for a long time. As the market changes, you need to change as well. When I first started trading, I was trading based on technicals, right? So backtrack quite a little bit. Trading changes over time. It used to be, again, I've used this example a couple of times. It used to be that your grandparents would call their broker, place a trade. They would look in the newspaper the next day. Then it went to online. Then the big boys started to use technicals, and then the big boys started to shift to algos, and then everybody followed. Everything is shifting. Now it's moving to artificial intelligence. The market is changing, and as it changes, we always need to adjust. I started trading close to 12 years ago, and that started with just technicals. I would wait for like trend lines, break of trend line, move to the upside. That's what I was doing. Then you had to adjust. Then the zones came in, and then understanding that necessarily indicators aren't as good as you think they are once you gain more knowledge, and then the adjustment into understanding fundamentals, and now the adjustment into different types of strategies. Okay, so as you gain more knowledge over the years, you start to see, okay, here's what's going wrong, here's where we're adjusting, and the adjustment will always continue. I mean, any company that is alive is always adjusting. It's always coming. It's always improving. It's always getting technically better. Okay, companies, look, even 20 years ago, some of the biggest companies in the world are no longer around because they failed to adjust. We're always going to be adjusting. Okay, so appreciate it, everybody. Thanks for all the happy birthday wishes. It means a lot to me. Seriously, it means a lot to me. Okay, so Strategy 2. We're going to get into it. I'm going to share my screen and we're going to go right into it. Okay, if you want to review Strategy 1, it is in the educational channel on Discord. Watch that. This isn't about Strategy 1. This is about Strategy 2. Okay, so we're going to get into Strategy 2 now. So Strategy 2 is consolidation. Strategy 2 is based on when market is moving sideways or consolidation. Okay, so Strat 2 is a powerful strategy which capitalizes on sideways movement in the market, also known as consolidation. In this strategy, we will look to capitalize on limit orders, area of sensitivity. The sensitivity could be demand zones, or it could be significantly respected trend lines or channels, although it will be less so than demand zones. Okay, we will usually use trend lines and channels in confirmation with demand zones. Okay, with today's market environment and fundamental direction being so volatile due to many reasons, some being COVID, inflation, interest rates, trade flows, for example, it has diminished the consistency of which a trend relies upon. So for Strategy 1, we rely on consistency on a trend. That consistency is starting to fade. Why? Because the market is reacting to every single thing that's happening. When inflation goes up, market value of currency goes down, and interest rates stay the same, and it goes up. Consistency in its trend is less so in terms of its length. Okay, I forget that the word for it, but in this scenario, in the market we're in, the longer we're in a trade now, the higher the variable of the increased chance of a loss is what I'm trying to say. You're increasing your exposure the longer you're in the market, because consistency of a trend is now much more difficult than it was before. Okay, so fundamental direction can come to can many times unknowingly and unexpectedly change in today's market, which we just talked about. And due to these market changes, we'll be putting more weight on Strategy 2. Strat 2 will allow us to capitalize on high probability quick in, quick outs, with the average hold time expected to be less than 6 hours. The foundation of Strat 2 is to capitalize on impulse moves off area of sensitivity. okay, which we'll get to in a second. Okay, the two most important areas of sensitivity are demand zones and trend lines. Okay, the reason why zones and trend lines are sensitive is due to the amount of orders located at these areas. The sensitivity or impulse of these areas are due to the execution of, as we know, take profits, stop losses, right? Limit orders, stop orders, okay? And the market finds these levels and recognizes these levels as important, okay? So the important thing to understand before we get to anything, I just want to quickly draw this, okay? We know that zones, let's just say that this is a zone, okay? Doesn't matter which zone, it's a level of importance. This is an upper zone, this is a lower zone. This is a level of battle between buyers and sellers. Sellers, okay, and buyers, all right? And this level is determined based on historical information. If we know that there is respect from this level, we know that there will continue to be respect from this level. Okay, so what's really important to understand in its basic simplified form is that when price, whether or not it moves to the upside or whether it moves to the downside, there will be sensitivity, which we call impulse moves when we've identified significant zones, because this is where orders will be taken, will be entered. There's impulse moves. There's millions of these orders, take profits, SLs, limit orders, stop orders being executed, causing a bounce and a battle between buy pressure, sell pressure. Okay, that's in its basic, simplest form. Now we're going to get into these obviously a lot deeper. Okay, so strategy 2 has 3 subsections: strategy 2A, strategy 2B, strategy 2C, which we can see variations of strategy 2. Okay, just like with strategy 1, all right, we had variations of strategy 1. We had A, B, C, D. Okay, here we have just A, B, C. Sorry, I have a float plane. Let's give it a sec. Float plane is flying above me. They land right over there by. Okay, so sorry for the noise there. It sounds like a lawnmower going on. All right, I hate float planes, by the way. So the engine is so heavy at the front that if the propeller stops, you pretty much are doing a controlled dive. Okay, it doesn't necessarily glide like other planes because it's so front heavy. It's like a controlled dive. I don't like float planes. Anyway, so okay, back to what really matters. Strategy 2 has 3 subsections: strategy 2A, strategy 2B, strategy 2C. Okay, which means we're dealing with limit orders. Strategy 2 is limit orders only. Strategy 1 requires price action confirmation and entry confirmation. Okay, strategy 2 is limit orders because we are trying to capitalize on the quick impulse at contacts of area sensitivity. Now, let's go through these 3 scenarios: strategy 2A, 2B, 2C, and we'll use this chart. Start with 2A, of course. Okay, strategy 2A. Strat 2A is a strategy which intends to capitalize on true consolidation. True consolidation would mean that fundamentals are fairly equal while price trades in between 2 respective demand zones. Strat 2A is based on knowledge that price will not and cannot break an area of historical sensitivity without fundamental support, which I also like to call air support. Zones are a battleground between buyers and sellers, and price will trade in between until there is enough air support or fundamental support to break its push either to the upside or to the downside. Strat 2 aims to capitalize within the full consolidation range. Okay, we'll get to characteristics. Now, the thing what Strat 2A means, so let's go to the charts. We'll come back to the characteristics. Let's go to the charts. So in the charts here, what do we see? Here's our monthly, weekly, daily. Okay, but what we can see is in between our weekly, which is a significant level of sell pressure, and in between our daily, which is a significant level of buy pressure, other than this spike and up to the downside, we have significant respect at sell pressure and buy pressure. Okay, so we know we have significant battlegrounds. That's characteristic number 1 of Strat 2A, is prices in consolidation, not in between the 15-minute time frame zones, not in between the 1H, but in between significant zones, higher time frame significant zones. Here we have the weekly, here we have the daily, 2 significant zones, prices in consolidation in between. Okay, then when we take it, let's zoom in a bit. What we're going to do is we're going to zoom into this level of consolidation. So as you can see, we do have historical consolidation that goes even further back. Obviously, I couldn't fit it in this picture. Okay, So we know that this is respected levels of sensitivity. So as we bring it in, what we can see is that every time price makes contact with level of sensitivity, it fails to break either to the upside or to the downside. Now, this makes sense, right? This makes complete sense. Let's think about this. Assuming hypothetically, fundamentals in this case are flat. So let's say this is like Aussie yen, okay? Just for example, doesn't matter. It could be any pair. Let's say this is at a negative 0.4 and this is at a -1. So fundamentals are close, they're flat. That means what? That means, do you think buy pressure will have enough power to break, or fundamental support, air support, to break sell pressure at its weekly zone when fundamentals are flat? Absolutely not. There is no fundamental support. That's why sell pressure will win this battle. When price makes its way back down, do you think sell pressure will have enough sell pressure will have enough fundamental support, air support, to break buy pressure to the downside when fundamentals are flat? Absolutely not. So strategy 2A is when price is trading in between two significant zones. When we have fundamentals are flat, we look for the full range of consolidation. We look to profit that full range. So as you can see, we will have TP1s, of course, but for this example, I'm just showing you that we're placing buy limit order at the bottom, full range. We're going to close out, sell limit order. Full range, close out, buy limit order. And when will these types of trades be entered? When we're in between two levels of significance, when fundamentals are flat. Okay, we look for the full range. TP1 will be taken 50% of the way. SL moves to entry. That doesn't change at all, ever. However, we look for the full range of consolidation. Now, okay, so let's take it to the characteristics. Cool. Fundamentals are close in strength. They have to be very close in strength, because remember, buy pressure, sell pressure there can't be too much strength in one or the other, or they could potentially break with air support. Clear consolidation range in between two significant, I'm going to add right there, significant demand zones. Horizontal respect with limit of historical stop hunts. Okay, so when we take it, it's important to understand when we enter on strategy 2, we're not entering on the daily time frame. We're going to be looking at 1 hour zones, 1 hour time frames. We're going to be looking even at like the 15-minute price action before potentially placing an entry and whatnot. We're going to start to look at the lower time frames. So with that, we have to be understanding that there can't be too many stop hunts. So for example, what about limited stop hunts? That's condition 3. So what does that mean? Well, let's say there was a stop hunt here, and then a stop hunt here, and then a stop hunt here, and a stop hunt here. Would we want to place limit orders? No, because we know that there's stop hunts. Our SL will probably be taken out before a move to the downside. So in that case, we want to wait for the stop hunt to happen. Okay, so when it says limited stop hunt, we have to look at historicals, and we say, okay, is there actual sensitivity, or is there a bunch of stop hunts happening? And if that's the case, then that's not a condition for strat 2A. All right, so strat 2A in summary, as you can see, we're looking to capitalize on the full consolidation zone, consolidation range. And you'll see here for strat 2B, why is it that there's no sell pressure here? Or why is it that on strat 2B, I'm only showing buy pressure on one side instead of on the other? Whereas strat 2A is full consolidation. We're going to get to that right now. Okay, so strat 2A, full consolidation range. Strat 2B, okay, or target conditions, okay? Strat 2A aims to reach TP1 and TP2. Okay, TP1, we close half our trade, half the units we take profit. At TP1, we move SL to entry. We risk a maximum of 1 to 1.2% of account balance. David, why did it change from 2% to 1%? Strat 1 saying 2%. Why are we doing 1 to 1.2% here? Because when our SL, you got to remember, these are really tight SLs. Okay, these will be really tight SLs. That means our value per pip is very high. We don't need to be at 2% risk. 1% risk, our value per pip will stay very high. These are quick in, quick outs. Okay, 1 to 1.2% risk. All right, so strat B. Strat B is a strategy which intends to capitalize on limit orders in the direction of fundamental bias. In the market, there's often a directional bias. This bias can come from future fundamental expectations and outlook. So for example, if the USD is going to see, you know, strong NFP or expected to see strong NFP, we can start to see strength in USD bias earlier in the week as the market's starting to price that in, right? So that's what it means by future fundamental expectations and outlooks. It can also come from slight strength weakness over time that is not so pronounced in this trend like it required in Strat 1. Sometimes there's a trend, but it's not so pronounced, right? The idea of Strat 2B is that if the market has established a significant historical respect or demand zone, okay, as an example below, as the price is trending to the upside, we will look to place a limit order at completion of exhaustion to the upside. In the example below, the buy limit order entry to the upside would be high probability resistance at its demand zone will now become support. Additional confirmation would be support from the 38.50 and 61.2% fib. Now I know that could be a little bit confusing. Now let's simplify the complicated here, okay? Let's give you a little bit of an example. So let's say, for example, all right, in the previous Strat 2A, right, we said we're looking for full consolidation range to capitalize on full consolidation range. That's because fundamentals are flat. But let's say, okay, Aussie was actually a positive 2, and then Yen was, for example, a negative 0.1. Okay, this is still relatively close in terms of fundamentals, but instead of the trend line looking like this to the upside, maybe it looks like this to the upside. So we have slight bias, and that's what we mean. Okay, so when we have slight bias to the upside, do we want to enter to the downside? It depends. If the bias reaches a significant area of sensitivity, maybe we find Strat 2C, which we'll get to. But in terms of Strat 2B, and specifically Strat 2B, we don't want to enter against the trend. So in this case, for example, let's look at this. Okay, so we have a daily zone, and as we can see, this has been a significant area of resistance, which is now going to become support. So this would be a buy limit order entry for Strat 2B. Why? Because let's say hypothetically, as you can see here, we have an uptrend. And let's say it's just a minor uptrend, but still we have upward bias. We have upward bias, kind of like how Harvard has a bias for, you know, blonde, rich, white kids that come from prep schools, okay? We have an upward bias, all right? Which means what? When we see the push breaking former resistance, exhaustion, this becomes a high probability buy limit order as long as this demand zone shows historical respect. Think about this. We have direction slightly to the upside. We have historical resistance. We have a push, exhaustion. What do you think is going to happen at this level? Of course, we're going to see an impulse move to the upside. Of course, we're going to see some respect. Of course, there's a market grab. So Strat 2B, in this case, okay, as you can see here, this is Strat 2C. Don't worry about this right now. We're going to get to this. This is Strat 2B, which means what? Push, exhaustion. Sometimes we have confirmations of these exhaustion. For example, when we put our fib, what do we see? Our daily zone lines up with the 50% Fibonacci. So we can add confirmations. This is just adding probability to the success. Now, unlike strategy 1, we're not looking for some, 3-day, 4-day move to the upside. We're looking for quick ins, quick outs. We're going to be in and out of there. Okay? So it's important to understand that Strat 2B is saying, okay, this is going to be limit orders, and in this case, because we're moving to the upside. So let's zoom in a bit. Okay, so Strat 2B, as you can see, we're only looking for limit orders in the direction of the trend. Strat 2A, we're looking for sell orders and buy orders for full consolidation range because fundamentals are really flat. When fundamentals have a slight bias, we're only looking for limit orders in the direction of that bias, but quick in, quick out. It's not like Strat 1. All right. So now let's get to Strat 2. Strat 2C, excuse me. Strat 2C is going to be actually, let's not go too fast. Let's finish off with Strat 2B. What are some of the characteristics? Okay, Strat 2B, okay. Fundamentals are slightly biased either to the upside or to the downside, right? Not necessarily drastic. It doesn't necessarily have to be a drastic trend. Clear horizontal levels of historical sensitivity demand zones, easily to identify support resistance for a proper push and exhaustion. So for example, if this zone is not really respected, maybe it is now, but maybe historically not necessarily respected, this doesn't become necessarily a high probability exhaustion. This zone has to be historically respected, and not just like you have to work hard to find it. Like you can see clearly that that's an area of historical sensitivity. Okay, horizontal respect with limited stop hunts. Again, for example, if we have a stop hunt here and a stop hunt here, there's a probability that that's going to be a stop hunt here. So we have to understand that if there is stop hunts at previous contact of area sensitivity, our probability of success drastically lowers. Okay, so we have to see actual sensitivity at that level. Okay, and why are we increasing our risk? Why is it now 1.2 to 1.5 instead of 1 to 1.2? Because we're entering a BLO also in the direction of fundamental bias. There's a slight bias to the upside. So we have slight fundamental support. Thus, if we do find an entry on Strat 2B, it is a little bit more high probability, so we can risk a little bit more and get a little bit more value per pip. Okay, with Strat 2B, we will aim to close half our position at TP1 and trail SL for the remainder of the push. Why is that, David? Why is it that for Strat 2A, we have to close out at full consolidation range? And why is it for Strat 2B, we close out half position at TP1 and we trail our SL? The reason is because there's a possibility with fundamental support that we start to make our way, instead of a short-term quick in, quick out, we may find our way finding ourselves in a significant push, which obviously would be great since our value per pip is significant. So Strat 2B, we will close 50% of the trade out at TP1, and then we will start to trail our SL. We move it to entry first. Once it moves to the upside, we bring it up a little bit. Okay, so there's going to be a lot of trade management. Now, that's one of the things that will change with what we're doing. Okay, we're going to continue to do live sessions, of course, but again, as you all know, it's going to be more educational side. As far as we'll get to that at the end. Okay, let's get to that now. Okay, so this is Strat 2B. Now, as you can see, you see Strat 2C here. What is Strat 2C? Okay, we talked about Strat 2A, full range. Strat 2B, when there's a bias, we're only looking for entry in one direction. Strat 2C, what is that? It's counter trend. It's a real quick in, quick out. Strat 2C is a strategy in which we will look to capitalize quickly at significant area of historical sensitivity, even if it's counter trend. As these entries are counter trend, we will look for quick ins, quick outs, roughly 10 to 15 pips to avoid a very real possibility of a change in direction. Strat 2C is the riskiest between all three subsections of Strat 2. And this requires the most attention and trade management when we are in a live entry. This is not going to be an entry for those of you that want to be on the charts once a day. Okay. Strat 2C capitalizes on impulse moves at area sensitivity, even if it's counter trend, as long as there is a clear historical respect at that sensitivity. Okay, so we're going to use the same sort of charts, right? Here we have Strat 2B, right? Push breaking former resistance by BLO at support. Let's talk about Strat 2C. Now, there still is a high probability chance to grab 10 to 15 pips, depending on the pair, at area of sensitivity. Think about this. When price makes a push and reaches our daily zone, again, what's happening here? We talked about this. Take profits are being taken. SLs are being taken above. All right. Limit orders are being executed. Market orders, stop orders are being executed. Even though fundamental direction is to the upside, we still have impulse moves to the downside. Now, sometimes these impulse moves are long. As you can see here, we have a significant move to the downside. And sometimes when they're counter trend, they're short. So as you can see, this is the potential risk. Sometimes they're good impulses, and sometimes they're short impulses. But either way, there is money to be made at contact. So let's talk about, okay, contact 2, for example. So contact 1, we see prices making its way to our significant historical daily zone. We place a sell limit order for Strat 2C, but since we're against the trend, we're doing a quick in, quick out. So it moves 10 pips, boom, we're gone. We're out of the trade here. All right, price makes its way to the downside and we start to make our way back to area of significance. We place another SLO for Strat 2C and boom, we get out, but we got out again at 10 pips, but at the right time, or 10, 15 pips, but at the right time, because as you can see, fundamentals retested because fundamental support is to the upside. So we have to be aware that it may not make a full move, but it could make a small impulse move before retesting to the upside. That's the danger of Strat 2C. That's why we're looking for quick and quick outs. So Strat 2C on the lower time frame. Okay, we're going to take it to this second touch, lower time frame. So we know price is now making a push, making its way again to its daily zone. We know again, what do we know about the daily zone? Historically identified as a significant area of sensitivity. We know also what? That at previous contact, okay, there was a significant move to the downside, again, confirming at last contact that there's sensitivity. Okay, we see a strong move to the downside. So it's not necessarily, this move back to the upside is not necessarily an impulse and retest. Okay, so we say, okay, this is a good opportunity. Strat 2C, quick in, quick out, grab 10, 15 pips, we're out of there. All right, so what do? We place a sell limit order and it will be sharp. Our limit orders are going to be sharp. It's not just going to be somewhere in between the zones. Okay, it will be a sharp limit order, just a straight line. If it's blue, it means buy limit order. If it's red, it means sell limit order. Okay, sell limit order, boom, here's 10 pips, as you can see. Impulse move, why? What happened? SLs, TPs, limit orders, market orders, stop orders at this level of significance. This is a battle between sellers and buyers, okay? And even if fundamental direction is to the upside, we know that there's impulse moves off levels of significance, but we cannot be in the trade for too long because we know that there will be a change in direction. So boom, quick grabs, 10 pips, you know, and because of the value per pip, because the SL will be tighter than, of course, strategy one, this will be a nice little grab, and then we're out. Okay, 10, 15 pips, depends on the pair, and we're out. We're not trying to hold it. We're not dragging our SL, 10, 15 pips. We grab our pips, and we're out. Okay, so this is counter trend. Okay, we'll get to the entry checklist in a second. Okay, so let's review for a sec. Strat 2A, fundamentals are flat. We're looking for an Strat 2A. What are the two most important things Strat 2A? In between two significant demand zones, not a 1/8 zone or a 15-minute zone, and fundamentals are flat. We look for the full range at take profit at consolidation. Okay, full range, both buy pressure, both sell limit orders and buy limit orders. Strat 2B, we have bias, in this case, bias to the upside. So we're only looking for buy limit orders to the upside. And yes, in this case, we could use Strat 2C. We'll get to that in a second. Strat 2C, quick in, quick outs. Counter trend, quick in, quick outs. Very important that you have to be in front of the charts if you're going to enter Strat 2C. We'll get to that in a sec as well. Now, I want to go to Strat 2B for a minute. Okay, Strat 2B. There we go. As you can see, what? We know that the trend bias is to the upside. So here, Strat 2C, 10 pips, 10, 15 pips, done. 10, 15 pips, done. Okay, we see another test to the upside. Why would we not enter SLO here, even though there would have been a 10, 15 pips? Because this is not a significant move to the downside. This is clearly an impulse move, meaning that once we see price fail to make its way to area of sensitivity, we know that this is a retest and a price is trying to break to the upside. So at this point, we try not to enter. Okay, so this is where it comes from me, from experience and whatnot. But Strat 2C, contact 10 pips, contact counter trend 10 pips. Strat 2B, why? BLO with the direction of bias. Okay, and then again, Strat 2A, we have full buys and sells at full range of consolidation. Okay, now let's go through entry checklist. Okay, entry checklist, strategy 2. Again, similar, very, very similar to strategy 1. We have to understand all upcoming economic releases. Every Monday, we're going to digest the coming economic releases, what that means, how that's likely going to affect the market. Identify VIX and the health of safe havens. Okay, when we know that safe havens are going to move to the upside, what happens to the other pairs? Downside. When we know safe havens are moving to the downside, what's happening to the other pairs moving to the upside? Extremely important for us to identify the VIX charts before every entry. Okay, next week we're going to go specifically on the VIX. 3, identify all qualified pairs, create a short list. Okay, we're going to have a watch list, a short list that you're going to be able to print out on your own. Okay, it's going to be FX, crypto, stocks. Okay, we're going to identify the short list. The short list has to be in front of you. Okay, not just in memory. You have to have it on paper. You have to know which pairs you're watching. You have to also make notes on those pairs. Okay, identify zones. As you all know, we have to, no matter what strategy. Okay, monthly, weekly, daily, 4H, 1H. Identify all potential channels, trend lines. We're identifying sensitivity. Okay. 6, identify targets, TPs, SLs, and expected entries. Okay. 7, create limit order requirements for strat 2. All right. So 8, before final entry, identify any possible opposing injection order. This is something that I'm going to start doing. Is we have to be like, you know, the defense lawyer. It's like, okay, well, yes, we want to enter on this pair. We think it's good, but let's think of any reason why it might not be good. Any reason. And if we can't find, or if we find very little, then we know it's a good, you got to play devil's advocate. You have to play devil's advocate. Okay. Strategy 2, rules of engagement. Entry must not be within 6 hours of economic release. Okay. Strategy 1, it's within 10 hours. Strategy 2 is within 6 hours, because we may be able to get in a quick in, quick out for strat 2C or strat 2B, maybe, depending on market expectations. Okay, 2, fundamental separation must be equal to or less than 3. So for example, let me ask you this question. If one pair, let's do Euro USD, for example, this could be any pair. Again, let's say Euro is at a positive 3, USD is at a 0. That means fundamentals are going to be to the upside, but not significant to the upside. This isn't a positive 7, you know what I mean? So at that point, we're only interested Euro USD strat 2B, because we have upward bias. What if Euro was at a positive 1 and USD was at a, you know, positive 0.4? Fundamentals are flat. That means strat 2A is in. If we can find a good opportunity for strat 2A is a possibility. What if Euro is at a -3 and USD is at 0? So fundamental direction is actually this would be better. So what if, I guess what I'm trying to say is, even if Euro is at a positive 3 and USD is at a 0, so there's a difference between 3 on the fundamental chart. At that point, we can still look for strat 2C counter trend. But let's say Euro was at like a positive 7. Are we looking for strat 2C? No, because it's greater than a distance of 3. It has to be a max distance of 3 for strat 2C. Okay, for counter trend strat 2C. All right. So quick summary before I answer the questions. I know there's a bunch of questions probably. Okay. Again, strat 2A, full consolidation range, buy limit orders and sell limit orders. Strat 2B, we find that the market direction, in this case, it's to the upside, only buy limit orders we're looking at for strat 2B, because remember, we're higher risk. Okay, strat 2C, counter trend, has to be within 3 of each other. If it's too fundamentally separated, this is out of the question. Okay, and if it is within 3, then we're doing quick in, quick outs, 10 to 15 pips. We close our orders and we're 2A, 2B, 2C. All right, let me see quick here. Thanks for all the happy birthday. Yes, it's recorded. This looks so legit. Excited to read this over. How has a backtest strategy worked? It's very good, Nick. Backtesting has been very, very good. Okay, how can we identify a fake out from the break? So it depends on the move. That's a very, it depends on the strategy. Is it 2A's? Is it 2B's? Is it 2C? Okay, how can we identify a fake out from this break? So I'm assuming you mean a stop hunt. Stop hunts will happen, not, here, let me just, it kind of goes to this, okay? It kind of goes back to, It kind of goes back to, for example, Strat 2C. So in this scenario, for example, here we have first contact and a move to the downside. We have a full move back to area of sensitivity. So this isn't an impulse move. This is an exhaustion, push, exhaustion. Here's a continuational push. Here, we do not see price make its way back to area of sensitivity. Price made its way for a quick, 20 pips impulse to the downside before retesting to the upside. Whenever we see that, we know that this is a retest of previous high and we stay out. These are the highest probabilities of stop hunts. And we can see that with a pin. Okay, so that's going to come from me. You're going to look to me for that, okay? All right, let's see. Any more questions? Can you quickly go over the VIX charts, what actually we're looking for here? Okay, so the VIX chart, buddy, we'll go over next week in detail. Okay, it's very simple. You go to the VIX chart, it's like a chart like any other chart. We will take that next week in detail. When the VIX is moving to the upside, it's a fear index. Okay, so this is fear. Okay, this is zero fear, this is high fear. When the charts move to the upside, so there's literally candles, right? When the charts move to the upside, that means what? High fear. When there's high fear, what happens to safe havens? They increase in value. When the charts move to the downside, fear has dropped. What happens to the safe havens? They decrease in value. But we're going to go into that in detail, so I don't want to do that right now. We're going to do that in detail next week. Okay? Okay. So team, that is it for strategy 1. That's it for strategy 2. This will be packaged nicely, sent to you hopefully this weekend. It depends. Sharif deserves a weekend too, so it may be on your table on Monday. All right. And anyways, I appreciate you all. Keep rocking. One more message here. I meant from placing a BLO, buy limit order for 2B. What if price goes back down as it's fate? Well, it could be the same thing for all of it, right? What if price stop hunts can happen on all of them, right? So that's what we have to watch for. That's where skill comes in, right? That's where I come in. So anyways, okay, team. So that's it for strategy 1. That's it for strategy 2. Hope you guys understand. Things are going to be a lot sharper here, a lot more tidy. Now, one of the things that I want to make clear here, okay? One of the things that I found. Here's the thing. I've been focusing too much on live sessions, meaning I need to focus on trading. I don't want to focus on, putting down a watch list for you guys and then doing all this. That's being sent out on the signals anyways, right? What we're going to do is you're going to be live with me and Jake, meaning I'm going to be on the markets, Jake will be on the markets, and that's it. Our focus will be fucking trading, especially with strategy 2. Live sessions will be educational and here and there and that and so forth. We'll have it every day. We'll do quick reviews, but they're going to be quick. Okay, because the reality is I've been focusing on other things other than trading, and that can't happen. The number 1 job is to trade and to enter profitable trades, especially with strategy 2. Okay, so I know a lot of you love the live sessions and so forth, and we're still going to do it, but the live sessions are going to more convert to you're going to be trading with us live. Okay, you're just going to be trading with us live. I need to focus on trading, right? We need to focus on trading, right? Not any of the other crap. So that's what we're going to do. From now on, you're going to be trading with us and trading with us. Any signals will be sent to the signals channel. There's no need to go through it in the live and just do it again and waste time doing it, especially during important hours. Okay, so we're going to focus on just trading, and then we will have our Tuesday educational, Wednesday Q&A. Okay, but it depends. It may change. If Tuesday is going to be a busy day for potential entries, then we'll change. What comes first now is just the trades. Everything else is second, okay? It's important to understand that. It's important to understand that because I know some of you expect this, every Monday to Wednesday, live session, breakdown, this and all these fancy. No, we're focusing on our fucking trades now. We're focusing on the trades. The live sessions will be a Zoom link. You join Jake and I, and we're going to be on the market for however long we're going to be. The live sessions could be 20 minutes. They could be 3 hours. It doesn't matter. We're focusing on trades, and that's what's going to happen. Okay. And then Tuesday, Wednesday, we'll have some sort of educational session. Okay. So I think that's just important. It's important for me. Okay. It's important for me to just focus in on trading. And it's important for you because that's in the end why you all are here. Okay. And that's what's going to happen. So we're going to dive in. We're just going to be focused on our fucking entries and very little on other things. Okay. So anyways, love you all. Keep rocking. And I will see you all on Monday. I'm going to be enjoying my weekend. It is my birthday weekend, but I'm going to be coming in on Monday and Jake on Monday, super fucking focused. Okay. Because the reality is we're now going to start daily. We're likely going to see daily entries on strategy 2 daily. That's right. Okay. We're going to come in. We're going to be focused. The back testing is done. It's time to fucking perform. Okay. And I will see you all on Monday. And let's come in focused. Let's come in ready for a big end of the month. Okay. Love you all. Thanks for being here. Appreciate it. And I will see you on Monday.